Thank you everybody for joining us this afternoon, Wednesday, June 16th, for today's free webinar for developing a performance system for trading psychology. My name is Chris Donovan. I am a sales associate with Lightspeed, and I will be hosting today. We're going to get started. Just before we do, I just wanted to show you a couple of things on our website. So if you have not yet already done so, I certainly encourage you to take a look at one of our free 10-day demos. So if you go to our website, lightspeed.com, in the top right-hand corner of the page, you'll see a button that says try a demo. If you click on that button, it'll take you to this page here where you just complete and fill out the requested information there and as well as the platform you wish to try. And you'd be receiving demo login credentials to your email shortly thereafter that you can use to log into the platform and try it out. Additionally, we are currently running a promo. The promo code is 10K2021. This promotion does apply for the first 90 days after your account is opened. You can receive up to $10,000 cash back through a rebate of 50% of your equities and options commissions within that 90-day period. So after the end of that 90-day period, within 45 days, you will be credited that balance to your account. And additionally, this is very important, in order to remain eligible to receive that rebate at the end of the promotion, your account must be funded with and maintain a minimum of $25,000 in equity at all times during the promotional period. So please do keep that in mind. Additionally, if you do want to go ahead and sign up for an account, you can click on the Open Account button here in the top right-hand part of the web page as well. That will take you to the first page and the first step in the process. The online application is for US residents. If you are a foreign applicant, if you are a non-US applicant, then you would have to mouse over Open Account, click on Download Forms, and you can navigate to the type of account that you wish to open, as well as the corresponding paperwork. So this will just take you to the PDF version of the application documents. So with that all being said, we're going to get started here for real. And thanks again, everybody, for joining us. I do have to read this disclaimer really quickly. This presentation is for informational purposes only. Nothing presented today should be construed as investment advice or a recommendation to buy, sell, or hold any security contract. Since we don't know everyone's investment objectives or risk tolerance, we are not endorsing any specific trading strategies. Security, derivative, and futures trading involves the substantial risk of loss and is not suitable for all investors. Each investor must consider whether this is a suitable investment, since you may lose all or more than your initial investment. Past performance is not indicative of future results. Lightspeed Financial Services Group, LLC, is not affiliated with these third-party market commentators, educators, or service providers. Data, information, and material content are provided for informational and educational purposes only. This content neither is nor should be construed as an investment solicitation, offer, recommendation to buy or sell any securities or contracts. Any investment decisions made by the user through the use of such content is solely based on the user's independent analysis, taking into consideration your financial circumstances, investment objectives, and risk tolerance. Lightspeed Financial Services Group, LLC does not endorse, nor offer, nor recommend any of the services or commentary provided by any of the market commentators, educators, or service providers, and any information used to execute any trading strategies are solely based on the independent analysis of the user. Thank you very much. If you have any questions today after the presentation, please feel free to send us. Please feel free to send us a question at sales@lightspeed.com, and we would be happy to answer and get back to you. So before I turn it over to our guest speaker today, Mr. Jared Tendler will be joining us this afternoon. Mr. Jared Tendler is a leading expert in how your mental game impacts performance. His clients include world champion poker players, the #1 ranked pool player in the world, professional golfers, and financial traders. Jared holds a master's degree in counseling psychology and attained a license as a mental health counselor, with over 16 years of experience coaching people from around the world and in multiple arenas. He is the author of 2 highly acclaimed books, The Mental Game of Poker 1 and 2, and just released his newest book, The Mental Game of Trading. He's also the host of the popular podcast, The Mental Game, and previously served as head of sports psychology for the esport organization Team Liquid. Jared's diverse experience and proven techniques make him among the best mental coaches in the world. So I'm going to turn things over to Mr. Tendler now. Jared, whenever you are ready, you may begin. Just one moment, please, while I make you the presenter. And ladies and gentlemen, before we also get started, I do want to let you know that we will be taking questions at the end of the webinar. So if you do have any questions along the way, please feel free to ask that in the question box, and we will do our best to get to each one at the end of the presentation. So Jared, with that said, please take it away.
All right, excellent. Well, thanks, Chris, very much for the great intro, and thanks for having me here today, and thanks to Lightspeed for allowing me to kind of share my wisdom with your audience here. I'm just trying to make sure that I can share my screen. So I see myself. Can you guys see? Can you also see my desktop?
We see your PowerPoint slide, the title page there, developing a performance system for trading psychology.
Okay, and do you see my webcam as well?
Yes, yes.
All right. Well, then we're good to go here. All right. Excellent. Well, listen, like I said, I'm happy to be here. Just kind of share a few things with all of you. And I'm particularly excited to be here because what I understand about the Lightspeed platform and the services that are provided means that all of you are actually serious and experienced traders, right? Who have a system or a strategy that's proven to be profitable, and you're obviously looking to make more money, right? And find ways to improve and make more of it. But that kind of puts you in the category of kind of ideal for my audience and for my system for trading psychology. I work really well with people that have an existing skill set. And in my experience, right, I've surveyed a lot of the other trading psychology material that's out there. A lot of it is really good, right? But there's never been a system like what I'm going to start to present to you today in trading. And the idea of having a system for trading psychology should not be taken lightly. The things you're going to learn today are very practical. They're straightforward. There's no sort of psychobabble BS here. It is kind of very orderly and systematic, much like what you expect and demand from your own trading. And so when we compare it to kind of what's out there, right? There's, as I said, there's a lot of great advice, but what you're going to get today is a lot more practical application for how you can take that advice and turn it into reasonable, measurable change in your ability to trade better and avoid some of the most common mistakes that typically affect you. Now, in the next 45 minutes, I'm going to kind of give you an overview of that system. But by the end of it, you're going to have a very clear idea on how to take the first step, something that you can do immediately afterwards or even begin doing as I'm talking, and it can impact your ability to trade better tomorrow, right? It's that sort of simple and straightforward to get started, and we'll kind of get into it. So for those of you who are a bit skeptical on the mental game or the value of psychology, whatever you want to call it, I understand your skepticism. Okay, I came from a background that was not of this world. I was not attempting to be a mental game coach when I was younger. I wanted to play professional golf, and so I'm kind of an athlete first, and a mental game coach second. So I understand your skepticism, and I also understand, in the trading world, I think that the importance of trading psychology has frankly been oversold. Sometimes you'll even hear people say that trading is all about psychology, and that is utter and complete nonsense, right? Psychology and trading is not. There we go. Trading is not all about psychology, right? But you cannot disregard it. Okay, psychology is important, but it's not the most important thing. Psychology cannot replace the skill and experience that you have to become a competent trader, right? And in my book, right, the mental game of trading, I actually reference a client for whom he had a decent amount of hesitation and second guessing and fear getting into trades. And as we kind of dug deeper into it, we realized a lot of the questions and the things that were kind of keeping him on the sidelines was actually mostly technical. And so the breakthrough for him came when I said, actually, for you right now, trading is 90% technical and 10% mental. And that kind of made him think about it a bit differently. forced him to dive into the details of what questions he was asking, why he was staying on the sidelines, what were the things that he was second guessing. As he answered all those questions and really consolidated his strategy, and he was primarily a discretionary trader, he was able to still systematize more of it, and that removed a predominant amount of the fear and hesitation. So for him, right, and for some of you, right, psychology is not the most important thing, but there comes a point where it becomes that becomes the case. And so whether you're skeptical, you cannot disregard the impact of this side, because it's effective. It's affecting your trading in measurable ways. It's costing you money, right? And at the end of the day, right, as much as you want to be a robot, and be effectively like an algorithmic trader for yourself, you're not. You're human, and that means that the emotions are going to affect your trading decisions. The question is not if they're affecting you. The question is whether or not you're aware of their effect. So skepticism is fine, right? But you have to make sure that you're not burying your head in the sand, because, right, emotions are costly, and if you're not, actually regularly, addressing this side, then you're not going to be able to make as much money as you can, right? At the end of the day, being able to identify those instances where, it's not a question of what you know as a trader. It's a question of being able to utilize what you know. And to me, that's the value of psychology. It's to be able to kind of unlock your knowledge base, right? The knowledge and the wisdom and experience and that you've attained, over your years of trading. There are key moments where that knowledge just gets wasted, right? You've all known the pain of the mistakes that you make from your own hands. There's nothing worse than that, right? Knowing clearly that you should stay on the sidelines, knowing that you should not jump in because of FOMO or greed. The frustration of, tripling positions, or, trying to avoid a losing day, hesitating, or, sizing up too small because, of fear, right? Those kinds of mistakes, they happen regularly, they happen often, and that is really where, my system provides a lot of value. And, ultimately, when you're able to kind of clear a lot of that, stuff out, well, what emerges, right? What emerges is more clarity on your ability to sort of see and read the market, to generate intuition and identify, opportunities that you wouldn't normally see. When you clear out a lot of the emotional volatility, right, you stop imprinting your own bias onto the market and are able to be more sort of sponge-like and absorbing what's happening and seeing how your strategy interacts and seeing where it doesn't, and identifying instances where you actually might need to pop out because you're sensing something at an intuitive level, right? That's what psychology has the value for. But to get there, you got to do some work. It's not as easy as just thinking in the right way. You can't just adopt a mindset that adopts a way of thinking or seeing the markets. You have to actually fundamentally correct, right, the source of your emotions. Now, I know Chris was kind enough to kind of do a quick intro on me, so this slide is somewhat not as relevant anymore. But what I'll just sort of say briefly is that the fact that my system has been proven, at the highest levels in many different industries from around the world, I think is really relevant, because when you're looking to try to solve these types of emotional problems, a big part of what we're going to do today is get you to think differently. And so I've had to take my system, which I began developing with golfers because I was a golfer myself, kind of choked trying to qualify for the US Open, which is happening this weekend. 23 years ago, missed basically missed a playoff by one shot to get onto second stage. There's two stages of qualifying, but that second stage is effectively a small PGA Tour event, because there's only about 60% of the fields automatically get into the US Open. 40% have to qualify. So, I missed basically, by a shot getting into that second stage qualifier. And it was because the pressure kind of got to me and I choked. But what I found in going through the traditional golf and sports psychology that was out there was that a lot of it sort of sounded good in theory, but it didn't actually get to the root of the issues and solve my problems once and for all. And so that's what I began developing in golf. I met a poker player randomly who found that there was such parallels between, what I was doing with golfers and what he needed. And so in poker, there was wide open runway. There was nobody doing what I was doing. And I was able to, kind of quickly scale up and build a business. And then all of a sudden, traders started picking up the mental game of poker and realizing, well, you change the word poker to trading and, it applies. Well, I wasn't actually going to do that. It took me 8 years to write The Mental Game of Trading. I had 3 years, kind of aggressively working on it, but 8 years really working aggressively in the trading industry. And, in that time, I've worked with over 200, both retail and institutional traders. So I've got experience working on kind of the low levels of somewhat beginners, the poker players who got into crypto, the retirees who are trying to make some money in their retirement years, and also, some of the best options and futures traders in the world. So with that said, let's start kind of diving in here. Going the wrong direction here. There we go. Okay. So the biggest question here is, why are you leaving money on the table? And for me, the biggest problem that I see with traders is not the greed and the fear and the FOMO and the discipline issues, the confidence issues, right? All of that stuff is secondary. The biggest problem that I see is the faulty way in which you even think about those problems, right? What you think is the problem is not actually the problem. And many of you are approaching working on your emotions, working on your psychology in the wrong way. You want to think about it like trying to get a weed out, right? In order to get a weed gone completely, you've got to kill it at the roots or pull it out by the roots, right? If you're stepping on it, if you're covering it over with dirt, if you're just, pulling it out but not actually getting the roots, well, what happens, right? The mistakes come back again and again and again, or the weeds come back again and again. Your mistakes keep happening again and again, right? And this is not, right? It's not because of a lack of intelligence. It's your emotional system has the power to make you stupid, right? And temporarily stupid. So it's not a question of what you know. The question is, why can't you stop yourself from violating your rules? Why can't you stop yourself from prematurely taking profit, right? You're seeing it, so close to actually closing out and hitting your target, and you just can't stand watching it dance around anymore, and you close it because you don't want it to reverse and stop you out for a loss, right? Or what about those times where you're actually convinced, that it's going to go higher, and so you just take your profit target off the table, remove those limit orders, and want it to just run, but of course, then it reverses and stops you out, right? Over trading, think about your most common and recurring and costly mistakes. Why do they happen? Well, at the beginning of this, I'm saying that it's happening because you don't even understand why those problems are occurring, right? And so we got to change your perspective on this whole, sort of avenue that we call trading psychology, because there's a lot of incorrect information out there, right? In order to actually solve those common trading mistakes, right, you have to get at the emotions that are causing them, right? And we're not talking about like major overwhelming problems. I'm not saying that you're getting pissed off every day and you're smashing your mouse or your monitor. I'm not saying that the fear is paralyzing you, or the greed is blinding you so severely that it's making you unable to profit, right? That's the point, right? You all have reached a level of competency here, both mentally and emotionally, as well as with your trading prowess. But there's more, right? And it. That's why you're here right now. You know that there is more opportunity. You know that there is money on the table that is left, and it's not to do with your skill. Okay. Some of you think that you can kind of like just outrun these emotional problems. So what do you do, right? The ethic is you just keep learning more and more and more about trading. You keep backtesting. You keep researching your system. And I'm not saying all those things are bad, right? You need to do that, right? As I said, that competency is essential, because what I offer is not that. And if you don't have that, like many beginners in this field, right? I mean, they make big money, but it's going to be mostly due to some luck. So competency is important, but you can't outrun these problems. Okay, so look at the next piece here. Now, the good thing is that these emotional problems happen in patterns. You are able to actually see that they're much like the patterns that you are observing in the market that allow you to find opportunities and you make profit. That is where your edge lies. And for me, I have the vision to be able to see the tea leaves, in a sense, right? Read your thoughts and emotions. I'm actually not reading your thoughts. I mean, clients tell me what they're thinking, and then, okay, I'm not a soothsayer here, but to understand the things that you're saying to yourself, the things that you're saying out loud, the actions that you're taking, right? To kind of see those signals and figure out what's happening behind them. And what's happening behind them are these range of performance flaws, right? That's the real problem we're after, is understanding the performance flaws that are the real problem. And when you start to see that that is the case, your entire approach to mental game or psychological improvement changes entirely. Now, I will talk more about those performance flaws. I'm just going to mention it to you briefly here. Okay. Now, once you actually understand that it's the performance flaws that are really the problem, not the emotions, right? You see that the emotions are a symptom, right? And so emotions can cause you to do things that you know are incorrect. I've already kind of mentioned this, right? You know better than to jump into a sideways market. You should be sitting on your hands, and yet you don't. You overtrade at times where there's just not opportunity. You know it, and yet you're compelled to trade. Why is that? Well, as I said, there are these performance flaws that are here. Okay, but what does this do here, right? This helps us to understand that the key is not about control. All right, the key is actually developing like a real solution to these problems, right? The control is like a short-term kind of stopgap, right? Control of your emotions is like the most common way of thinking about what you ought to do with them, right? But you wouldn't consider, the cast that you put on a broken leg to be the long-term solution, right? The cast on your broken leg is just a temporary tool to help you heal that problem. Emotional control is just a tool that you use temporarily to help you work through these problems, so that in the short term, it's not causing major problems. Because if you're just going to say, all right, well, I'm not going to even attempt to control my emotions, and then the revenge trading is just going to run you over, and yeah, of course you're going to make even more mistakes, lose even more money, right? So I'm not saying that emotional control is bad. I'm saying that emotional control is not a solution, right? Emotional control is just the temporary step that you need to take in order to actually heal. Because if you're using emotional control as the solution, well, then what you've actually done is given yourself a permanent job, right? We're gonna look at this as a bit of a math problem here, okay? The mind has a limited capacity to how much resources it can devote at any one time. If you're using mental resources to control your emotions, well, you've chopped out a section of that, emotional or mental capital to be protecting yourself from your own emotional volatility, which again is good in the short term, but in the long term, it diminishes the amount that you can actually be really focused on the markets themselves, be understanding the interaction between your strategy and system, and reading changes the market and sensing opportunity and tapping into intuition. You cannot trade at your absolute best if you're having to, on the one hand, look for opportunities, and on the other hand, defend against your own emotional crap that's going to get in the way and force your hand to make mistakes, right? So emotional control, if that is all you're doing, is basically a permanent job, right? You're setting up shop, permanently defending against that emotional volatility. But again, it's a math problem, right? You don't want to be devoting mental resources, just in that way. What you want to do is get to the root of the problem. And when that happens, you have a chance to actually fundamentally correct it and upgrade it, right? Free your mind so you can actually have more of those resources, devoted to your trading. There's a swing trader that I mentioned in the trading book, and after about 4 sessions, we had removed so much of that emotional volatility, right? It wasn't all gone, but this guy was a swing trader, and he was a swing trader because he couldn't handle the emotional volatility that came with day trading. It was just too emotionally intense, right? Day over day, he wasn't able to kind of reset himself, right? Any losses on day one would carry over to day two, and he just couldn't sustain himself. So swing trading was his sort of antidote to that. That was a way that he was controlling his emotions. All right, so think for yourself, right? Are there things that you're doing in your trading, the ways that you're kind of managing yourself, that are actually ways that you are, kind of controlling your emotions? Like, do you take big breaks in the middle of the trading day? Do you stop trading after you've reached, a certain profit target? I'm a fan of stop losses for the day, but even that to some extent is, again, kind of limiting, your emotional downside, which again is important. I'm not saying stop doing that, right? Certainly not until you've gotten the book, until you've gotten, kind of through this system here. But once you start to work through it, you are going to have an opportunity to really get freed up. Okay. So before we get into a few more principles here, I want to first spend a little bit of time, kind of thinking about the big 5 psychological problems. There's a lot of, kind of issues that exist in trading, but when you kind of start to navigate and look at, kind of what's there, to me, I think we can simplify it down to 5. Okay, and so when you start kind of hearing me talk about these things, really start to think for yourself, which are the ones that are really plaguing you the most. And each of these 5 topics are each individual chapters in the book. So there's plenty of material in there. But what I'm going to talk about, with you right now is kind of an overview, but also maybe some different perspective on each of these topics, because I've got a unique perspective on them. So let's get into this first one. Everybody's favorite, greed. Okay. All right. So we all know, of course, the Wall Street quote, right? Greed, for lack of a better word, is good. We look at that quote a little bit more closely and see, well, what's the lack of a better word? Okay, your job is to make money, right? If we're going to remove the societal impact or the societal connotation that greed has, and we look at greed as a performance problem, well, then what the heck are we really talking about? Okay, what we're talking about is like maybe excessive ambition, right? Because your job is to make money. It is not greedy to try to make as much money as you can, right? We would never say that Michael Jordan and Tiger Woods or Rafa Nadal, pick the athlete. We would never say that they were greedy trying to win more championships. It's illogical. It doesn't make sense. So none of you are greedy trying to make money, trying to make more of it, trying to make as much as you can. That is the nature of trading. That's why you are here, right? And frankly, it's the kind of competition that I love, because it brings out a level of intensity to be great at something that I think all of you are here trying to do. So there's no problems in that, in my mind. The problem is that your ambition, so to speak, right, gets excessive at times, and you take risks that actually, come to hurt you, come to haunt you. They cost you money, right? But those are no different than the instances that, pick a sport, right? The tennis player who, tries to hit this crazy shot, at an inopportune time, or a golfer who tries to hit, an overly aggressive shot. The football player who, rather than just falling on a fumble, tries to pick it up and run with it. And, sometimes we'll hear them commentators say, oh, he's just being greedy. That's greed for you guys. That's what we're talking about here. But the thing is, nobody from the outside can really firmly know when you have crossed that line and you're actually costing yourself money because of greed, versus no, maybe actually you were just trying to make a play. Maybe you're just trying to make a bit of money, and you may have overextended yourself, or maybe you didn't. Maybe it actually was, a profitable decision long term, right? And then the short term in trading is tough to know these things sometimes. But the bottom line is, when I looked at greed, I didn't find anything that was uniquely problematic for it, right? So spoiler alert here, if you're going to get into the book, you're going to read about 4 clients who each, when they first came to me, said, yep, I've got a problem with greed. And as we dug beneath the surface, the problems were actually due to fear and to FOMO, or to anger issues, to confidence issues, to overconfidence, right? That those were the issues that were sort of forcing them to make decisions that felt greedy, but were just being categorized that way, I think because of those societal connotations. So again, we're not trying to say that those impulses to make a lot of money are bad. We're just saying, find the line where you're taking on a bit too much risk relative to the return there. All right, so now we get to fear. All right, greed and fear. Greed and fear index, here we go, top 2 things. But yet again, we look at fear. In my mind, fear is way overblown in terms of its predominance in the industry. And I think first and foremost, what we're looking at here is, if we treat trading as a performance environment, right, a competitive environment that is fundamentally no different than any of the sports that I just mentioned, well, then what are we really dealing with is, on some level, the inherent intensity of the environment, right? And I think this is more kind of particular for newer traders, ones who are kind of coming off the sim and, they have difficulty making that transition, and they think, oh, the sim, I'm trading well there, I should just be able to make money in the live market. Well, you can't, because the sim is not real, right? The live market is where it matters, and you are different in your interactions with it, because now your goals and your dreams and your money is on the line. So point here is that I think a lot of people overestimate the predominance of actual fear in the market, and when we actually should be talking about just sort of the inherent intensity. Because if you talk to any athlete, if they don't feel that level of intensity, the nerves before they go compete, well, I mean, that tells them that they should probably quit, right? That the love for the game, the desire to be great, the desire to win, really isn't there. So if you're not feeling something when you kind of sit down to trade, I would actually think that would be more problematic than the other way around. So, okay, we sort of scrap that part of the fear, kind of category out of the window now, and we say, okay, what are the real problems with fear? Now we're talking about the fear of losing, right? The fear of mistakes, the fear of failing, the fear of going bust, some of the real things that are going to compromise, your mentality. And that's the stuff that, the chapter in the book, really dives into deep in understanding all the performance flaws that are going to cause that fear. Next, we're going to talk about tilt. Okay, so anger, right? Anger, tilt. All right, the term tilt comes from poker. Actually comes from pinball, right? Where people would get so pissed off that they would literally tilt the pinball machine to try to manipulate it and make it go the way they wanted to. But look, if you're gonna have an anger problem, right? If you're gonna have revenge trading, if you're gonna get pissed off at losing, if you're gonna hate losing, so bad that it, compels you to make mistakes. I'm not saying you have to love losing. By any means, I'm not saying that, right? But if your hatred of losing causes you to make more mistakes, causes you to lose money, well then, I mean, it's kind of ridiculous, right? But that's the problem. So it's not the hatred of losing per se, it's that the hatred of losing is so intense that it causes you to lose more money. So to me, if you're gonna have an anger problem, let's call it tilt. It's a little more fun, say you're a raging monkey tilter, something like that. But anyway, when we're talking about anger, we're talking about, again, the hatred of losing, revenge trading, entitlement tilts, right, where you think you sort of deserve to make money, mistake tilt, and injustice tilt, which is where you feel like, the market's fundamentally unfair. Now, or, the people are kind of out to get you, the platforms or the hedge funds or whomever, kind of targeting you, right? And again, some of the stuff on the surface seems like illogical, and it's really important that you're just honest and very detailed about, what those, mental and emotional signals are. I'm going to get to this in a bit, but that stuff may seem ludicrous on the surface, but I promise you, it all makes logical sense once you start to dig into it, because they become signals, right, of these, kind of underlying performance flaws. All right, the next category here is confidence. Now, confidence in trading, I mean, I don't know, I think in general, especially in Western society, confidence has been something that's not really been very well understood. On the one hand, people say, well, you have to have confidence, to be successful. You have to believe in yourself and all this stuff. And it's like, well, that's actually not true. I've worked with plenty of professionals, traders included, who were very kind of down on themselves and they were making tons of money. Or were, golfers who said, there's no way I'm going to do well this weekend, and they go on to win, right? You don't actually have to believe in yourself. You don't actually have to have confidence to be successful. You need to actually just be good at this. You need to have skill. You need to be competent more than you need to be confident. And this is, no more true than, when we look at, especially in poker, right, the definition of a poker fish, right, the weak players that all the poker players line up to play against. Well, what makes them fish, right, is that they are so overconfident that they don't even know how underconfident they how much they lack skill, right? They're, the American Idol contestant thinking that they're gonna, win the contest, and they have the worst voice there. It's like some people have so much confidence, right? So much belief in themselves, and they are actually pretty bad. So, right, on the one hand, you might have, maybe some of you are in this category, right? Some of you are actually very competent traders, and yet your confidence is lower than people who are very new to this game and thinking they're going to make a ton of money. And right, and so what's the rub here, right? The rub is confidence is not the most important factor, right? Confidence is simply your perception of your skill, right? So here are people who are overestimating their skill, and here are people who are underestimating their skill. Why is this important? You make decisions based on your own perception of what you got, right? How well, or does your system interact with the market right now, right? If not feeling it, right? Sometimes that could be legitimate, right? There are actually not good opportunities right now. The market is not right for your system. Other times, you're actually, kind of impairing your own ability to profit because, you're, kind of less trusting of your gut here, and you don't think that the opportunity is as big as you kind of sense it is, and so you size small and make a little bit of profit, but you keep missing out because you're just not, scaling big enough. So yeah, there's a lot of problems that emerge from confidence, and frankly, I think that a lot of greed is actually overconfidence. And I think the simple way to kind of identify if you are overconfident as somebody who is competent is that your ability to sort of see and measure and evaluate the downside risk is very minimal, right? You see all the upside, but you're not seeing how you can kind of get bit in the ass, so to speak, right? You need to be able to see objectively what your skill set is and how it interacts with the market. If you can do that, right, then your confidence is in the right place. Now, the last kind of piece of the puzzle here is discipline, right? And the reason that this one comes last, even though you do your research and look at the way that traders talk about discipline, and maybe many of you think about it this way, maybe you think a lot of the mistakes that you make are due to discipline. You see yourself violating your trading rules. You see yourself doubling positions and re-entering after you get stopped out, even though it was by one tick. You convince yourself it's justified because you're going to you're convinced that your original thesis was correct, right? Is that really a discipline issue? Or is it one of these four emotions compelling you to violate your trading strategy? And so I put this chapter right at the end here, right? In fact, these chapters kind of go in order of as I've mentioned them today. You need to rule out that it's not actually emotion that is forcing or compelling you to violate, your rules, to make decisions that are wrong, Then you can identify that no, it's actually a discipline issue. Discipline is, kind of very much of a mental training kind of a thing. So we're dealing with issues of impatience, with boredom. I think over focusing or hyper focusing on P&L or results day to day, some burnout, procrastination, and some laziness. Those are kind of the big issues we're talking about. And effectively, we're talking about weakness mentally. And so to me, discipline is sort of the training of the mind. It's can you get your mind to think systematically and consistently in the right way? Can you get yourself to follow your routine and to complete your trade journal, even at the end of big losing days or big winning days, so that you can stay consistent in your process? That's the kind of discipline stuff we're talking about here. And again, you got to rule out that emotions aren't the thing that's really the problematic piece. Okay, so just to kind of firmly root all this stuff in place, okay, I've talked about these big five problems, and a bulk of what I've talked about so far, is maybe beginning to kind of change your perspective on trading psychology, maybe a bit on emotions, but we're gonna really nail home these changes in how you view emotions, because if you are thinking incorrectly about them, you're just not going to be able to solve these problems fundamentally. Okay, so first off here, emotions aren't evil. Okay, emotions are signals to use and to learn from. It's a big shift. A lot of you think that greed and FOMO and fear, and right, you think those are the problems. They're not the problems. Right? They're a signal of the underlying performance flaws. I promise I will get to that in a minute. All right, of of those performance flaws, and that's what we're after. We're kind of reading the tea leaves on the surface, digging down and finding those performance flaws. Now, there is something, a rule that you need to know, and to me, this is one of these things that should be taught in school. It should be like ubiquitous. This shouldn't be novel for many of you to read about, and frankly, even in the psychology world, the therapy world, right? I was at a conference about 10 years ago, and somebody was kind of sharing this bit of knowledge, and I kind of looked around, see all the kind of, surprised faces around the audience and people thinking like, oh my God, this is, such novel and powerful information. It's absurd. This is very, very basic knowledge, but if you don't understand it, the way that you understand your own capacity to fix your mental game issues or your capacity to manage emotion in the short term is fundamentally altered. The emotions have the power to shut down higher brain function, right? So we think about higher brain function, we're talking about decision making, planning, thinking, right? The space in your mind, right? It shrinks as your emotions kind of rise too high. And guess what? One of these higher brain functions, emotional control. Okay, there's a part of the brain right up here, frontal lobe, called the prefrontal cortex. It's the part of the brain responsible for controlling your emotions. So you heard that right. The part of the brain responsible for controlling emotions can be shut down by your emotions. Okay, that is a fact. It is a fundamental law of human nature, right? You cannot change this, right? So what happens here? Okay, as that emotional system is shut down, right? Not entirely. If it's entirely shut down, we're talking like blue screen on your computer, right? You're in a blind rage, blind panic, just greedy out of your mind, like you can't see anything other than, the millions of dollars you're going to make. If we're kind of somewhere in the middle where you're compromised but not that much, what happens is you're aware of what's happening, right? You know that what you're doing is wrong. You know that you're not thinking properly, and yet you can't translate the correct thoughts into action, and you end up making decisions that you know better than. Why? Because the higher brain function has not completely been shut down. So you're aware, but not entirely in control. So what do we do about this? Okay. Burn this into your brain, because this is, I think, one of the most important things to firmly understand. You must start correcting your emotional reactions before they reach that point, right? When they're small, you got to see the early signs, the early warning signs. Because if you don't, well, then it's no different than, seeing the trade in the rearview mirror. It doesn't matter. It's gone. The opportunity's gone. You got to see the stuff through the windshield. You got to see that problems are on the horizon. You got to see that you're about to drive off a freaking cliff. Not in the rearview mirror when you're already, cascading downwards towards, what. So the point is, what we're going to get to very shortly is a mapping of your mental and emotional patterns that precede these problems for this freaking reason. Because if you start trying to control your emotions at that point, all bets are off, right? You're gambling with the mental game in my mind at that point. Okay, so the first step in my system, right, is mapping your pattern so that you can, here, actually, let me get to the next point here. Okay, mapping your pattern, okay, so that you can identify, right, that increase in emotion. And again, right, it is these signals, the emotions are signaling, right, these underlying performance flaws. So once you identify the performance flaw, right, then you can very quickly kind of develop a correction to it. Because again, this is where all that, the advice from the trading psychology world can come in handy here. I'm not the purveyor of all the right advice, right? There's a lot of good traders out there. There's a lot of good perspective out there, but you have to use it in the right way. And this is what I'm talking about, right? You got to use it early, and you got to use it correctly to correctly fix the underlying performance flaws that are what's creating the emotion. All right, so I've said this, a lot of times already. So here is what we're talking about here, okay? We're talking about these types of hidden problems, right? And in the book, I talk about 30 plus of them. Here are 5 examples, okay? These are the problems. This is why you're jumping into positions out of FOMO. This is why you're revenge trading. This is why you're tripling positions trying to avoid a losing day. Okay. Now I'm just going to give you a couple of examples here, then move on to the beginning of the correcting process. So expectations of perfection or high expectations. Okay, I get it. All of you have high expectations for yourself. Many of you have high expectations of yourself. Many of the best professionals in the world have these as well. Having high expectations or expectations of perfection are not inherently a problem, okay? However, in the hands of novices, which most of you are, okay? You're not the Jordans of the world, okay? Those athletes have a mastery of their emotions. They know how to prevent, right, the volatility that comes from high expectations from creating self-inflicted wounds, right? Because it is a double-edged sword. Many of you are using high expectations as a motivational source, when in fact it's actually also causing, a host of other issues, right? So how might, expectations of perfection or high expectations cause greed? Well, maybe you're greedily attempting to never miss a trade, or to squeeze out every cent out of one, right? Because that would mean that you're perfect. Or, what if there's some fear because, right, the expectations are so high, right? It's an impossible standard to live up to, and so you're just kind of cowering to the pressure of that like kind of overhanging expectation. Or, for some of you, you feel like an underperformance, a loss of confidence because you're continually not able to meet that benchmark, and so you feel, like you're not that good when, that's probably not fair. Or, you get overconfident when you finally feel like, yeah, you found it, and you found that strategy that's going to mint P&L forever, and and you feel like you've just, you're just going to constantly make money. That means you're effectively like living up to your expectations. Okay, so you can see how all that one flaw can create a host of problems. Next one here is the illusion of control. Basically, we're all after control. You want to have control over your results, but that's a long-term thing, not a short-term thing. Right? You don't have full control in the short term. So, but for many of you, that's a very difficult thing to do, and so you end up like kind of grabbing hold of some elements of trading as a way of kind of seeking control for something you don't have full control of. Right? So you start predicting outcomes. You think oh, this thing is going to stop me out, so I'm going to get out and taking kind of a one profit, right? You're not going to let it kind of stop you out for a loss. Or on the flip side, you're convinced that this thing is going to be a monster, and you sort of scale it, commensurate to that. But of course, you're sort of falsely seeking some kind of control here. Or you're also kind of ignoring variance, right? And there's this sort of impact of a desire to kind of know, what your results are going to be. This next one is kind of funny because, it's easy to kind of deny that you would expect to make money, from every trade or every day. And yet, right, when we start to peel back the surface, a lot of you actually have that thought, right? There is a distinct expectation that you ought to, and so what happens, right? You're down money, and then you start to do things to try to make money at the end of the day, even though you've been trading very well, and it's just one of those days where you're going to lose money. But your expectation of making money every day means that you got to start now doing something different in the afternoon to make that happen. Hating variance. Look, we all know it's an inherent part of this game here. So for me, when I start to look below the surface of what does hating variance really mean, it's not about variance per se. It's about hating the emotion that variance causes you. Black and white thinking, right? So this is, again, kind of a one that's a little bit harder to kind of ferret out. But if you're the kind of person that's always using the words always or never, right? You're kind of coding things in very kind of stark terms, like you either found it or you're just garbage, right? You're either great, you're gonna make a killing, or you're gonna kind of be broken, destitute on the street, pretty quickly. Or I commonly use this sort of construction of A game, B game, and C game, right, to kind of denote the different levels of your performance. If you're the kind of person that either thinks you're a kind of all A game or all C game, there's sort of no middle ground, right? You're either operating great or not. Black and white thinking may be kind of part of the main problem here. So again, I'm kind of using, right, some examples here of what exists on the surface, right? But these thoughts and emotions, we're just using them to figure out, what was really behind the scenes causing all these problems. And these 5 suckers, they are public enemy number 1 here. Okay, and like I said in the book, I talk about 25 some odd other ones, that are the real problem. But how do you get there, right? How do you get to the point where you can take the emotions and the thoughts and the things on the surface and dig down and find the real problem? Well, here's how to do it. And when I mentioned earlier that you're going to kind of walk away with something very tangible that you can use today to make you better for tomorrow, this is it right here. Okay, I want you to start mapping your patterns, mapping your problems. So basically take any one of your trading mistakes and start looking more closely at this information, right? So the trigger, right? What's the thing that sort of sparks the problem? Is it a sideways market? Is it seeing other traders making money and you're not, right? Seeing positions in other markets or seeing symbols in other markets, moving, and yet you're kind of holding the bag with a bunch of positions that you don't like. And so, right? What's the trigger? What's the thing that causes the greed, the fear, the anger, the confidence issues, or the violation of discipline? Then what are the thoughts that arise in your mind at that time, right? What are the things that you're thinking about? What are the emotions that come up, right? What are the behaviors, the actions that you take, or the mistakes? Maybe some of the physical signs, right? Do you get some tension in your head? You're gripping your mouse really, really tightly. Are you nervous? Are you kind of tapping your finger, tapping your foot? Looking for those things. Then we're also kind of looking at changes in your decision-making process, right? What pieces of your decision-making do you miss? Do you start to only look for 4 criteria out of 5 to jump into a trade? Is that kind of convincing you that it's justified? Do you create this sort of narrative in your mind of kind of logic, which really are just kind of excuses to violate your strategy? Write that stuff down, right? Changes in your perception of the market. Write all this stuff down. Right? These are the stuff that happens in very consistent patterns, right? And if you can identify it, right, then it becomes so much easier to be able to stop these problems in their tracks, right? Because we can't allow you that emotional system to get overactive. Otherwise, you're going to get run over and you're done for. All right, let me just give you an example here. Okay, so this is kind of a basic one, but right, the trigger is you get stopped out by a tick. The thought is, I can't believe this is happening again, right? So unlucky. How could this happen? Right? So what happens? The emotion is I want revenge. Right now, you're gonna hyper focus on finding a new entry, and you're gonna take a suboptimal entry, and maybe even several times as you continually get stopped back out because you just keep forcing that trade either to make more money, to make back for some loss, or trying to make money to make up for some losses, feeling like you're justified because your thesis was right and you have to be right. That's another underlying flaw, the feeling like you have to be right, or that you got to prove that you're right. Changes in decision making, right? Overly focused on getting your money back or reading too much into price action. Now, just a couple tips here on how you can create this map. First and foremost, the easiest thing to do, right, is again at the end of this webinar, just start thinking back to any mistakes you made today or the last few days or the last few weeks, right? Just start uncovering that stuff. Second to that, tomorrow, have a notepad open, right? And as you're going along, right, I'm not saying wait until you make a mistake, but wait until you start to see some of the variation, some of the volatility internally, right? The extra thoughts, right? The focusing kind of outside the system, outside the strategy that starts to keep to perk up, right? Sometimes the B game, right? The sort of intersection, the B game is sort of defined by the part of your game where you're aware of the potential that you might do something wrong, but you still have the presence of mind to stop it. That is like the best time to be studying your own patterns, right? Because you're actually not succumbing to these problems, right? Yeah, you're not trading at your best, but if you identify that stuff, right, there's going to be a lot of mental noise, right? A lot of emotional noise. You're going to see what those triggers are. You're going to see what the behaviors are, and you can start to map them down. So just stream of consciousness, write down what's going on in real time. If you're a scalper, obviously it gets a little tough, right? You don't have the opportunity, but you can always take like 2 minutes to just write down a bunch of stuff. And if you miss an opportunity, you miss an opportunity. That's part of the long-term investment here. Okay. Beyond that, one of the things you can do is to continually look for the early signals, right? Like I said, your main objective is to prevent your emotions from rising to the point where they're going to shut down higher brain function. If you do that, right, you're going to automatically remain in control, right? And that's ultimately the goal. That's the goal in the short term, right? In the long run, we want to understand the causality so that we can correct it so the emotional volatility is just gone. But looking for those early signals is really important. Set a timer or an alarm to kind of go off at some frequency. So you kind of just every half hour, every hour, alarm goes off and you just sort of write down what's going on in your head, write down what's going on recently, maybe just evaluate some of the trades or the positions you have on and just, again, see what sort of volatility is there. Consider meditation or mindfulness training. I am not a big proponent in this, right? Because I think sometimes meditation and mindfulness training can be overused and oversold, but it can be a very valuable tool to build awareness, right? To kind of be able to go internally and kind of recognize some things. I actually just saw some research, this past week. It's not totally verified, so I'm not saying this is fact, right? But what they began to found was that traders who are able to be aware of their heartbeat at times when they're trading, that they're actually more able to be in emotional control because they have the awareness that, when their emotions are rising higher. So meditation or mindfulness training can be helpful as a tool to build that capacity for awareness. And lastly here, you got to understand the intensification of emotion. What that means is that when we talk about like tilt or anger, at a small level, we're talking about frustration building into irritation, turning into just this like, intensity, tension, right? And then it turns to anger. With fear, we're talking about doubt or worry or hesitation, second guessing, nerves, right? And then it builds into fear. When you start to kind of see that those things are not separate emotions, but they're sort of just scaled, right? The doubt is like a small version of fear. Frustration is a small version of anger. When you start to see the early pieces of this, and it's just about, kind of scaled up in terms of size, then it becomes easier to kind of map those early signals. And the last thing I will say here is your ability to map your own patterns, your ability to see this stuff in real time, it's a skill, right? You all have a certain level of it right now. And the reality is that you can get better at it the more you study and look at this stuff. So, if you do this for a week straight, 2 weeks straight, there is not a chance in the world that you're not going to know more. And if that is true, which does happen, so not a chance in the world, but there's a small chance in the world. In the troubleshooting section of the last chapter of the book, I do talk about some people who have very difficult time with this. And by and large, the reason they have difficulty is because their ability to suppress and control their emotions is so incredibly strong, right, that they immediately just sort of squelch and just step on that weed and they prevent it, right? They're able to trade very well, right? But what we need to look at in that instance is that the signal is not the presence of emotion. The signal is the presence of that sort of squashing of your emotions. So that's the stuff you want to look out for. But again, bottom line here, it's a skill. You can train it and learn it. And if you want to get really in depth, right, this is what you can turn it into. Okay, you can take the mapping that I described earlier and turn it into a scale. All right, so what you see here on the one side, all right, you've got the greed level, right? This is the emotions, and on the other side, you've got the technical side, right? And we're scaling this. So at level 1 would be the smallest amount of greed, and at level 10 would be the biggest amount of greed, right? And so it's scaled in between. And so what this client did, and this is taken from the trading book as an example, what they have done is they have identified that, okay, when I recognize that I'm starting to think about the utility of money, right, wanting to lock up gains, right, that's like the first indication of a problem. Now, look, you can see on the technical side, there's no problem. There's no actual cost here, okay? There's no actual problems here. So they've identified as soon as that comes in, I start thinking about the utility of money. Well, then I've got to start correcting my greed then. And, this client was able to do that and, largely prevented problems and over time prevented that from even occurring. As it gets bigger, right, you can see the largest version of this would be, I want to make the absolute best return right now, right, and kind of give up all control and only focus on making money right now, no longer term thinking. So that's level 10. Again, level 10 on the technical side is, manually managing the trade, looking at every single minute to try to get the best price by looking at every single change in the market, right? Versus, a 1 to 4 hour candle as they normally would, right? So again, you can start to scale this stuff, and that helps to provide a roadmap for what you're looking at. And once you have this roadmap, right, then you can start to kind of peer beneath the surface at what those underlying performance flaws are, which is again kind of a bulk of what the book provides. Right, and then in chapter 9, right, the next thing you can do is develop a real-time system for establishing control or a correction in the moment, right? But again, it's the control in the short term. But if you do it right, then those attempts to control or correct your emotions in real time actually work towards a longer term solution so that over time you are fundamentally correcting those flaws. And when you do that, well, guess what, right? The emotion goes away for that reason, right? I'm not saying that you will never experience fear or anger anymore, but really what the goal is that we're after is to kind of clear out the internal flaws and biases that you are imprinting in the market. And if you clear a lot of that stuff out, well, then guess what, right? You're far more able to absorb what's going on and be more intuitive and be more sponge-like in a sense, able to absorb what's going on, not you forcing your own bias into the market, which, you know, is obviously going to be problematic. All right, I know I've gone a little bit long here, so I'm happy to stay around for a little bit and answer a few questions.
So we're opening up the floor to questions here. I did see one that we received towards the end. This individual would like to know, he said, you said you need to get to the root of the problem. Let's say I got there. How can I change the roots of the problem?
Yeah, so the roots of the problem are always flawed, right? And that's the reason why they're problematic. So when you identify kind of the roots here, right? You know, again, the bulk of the book kind of gets into this, but the point is that, you know, there are like kind of logical flaws for it. Like as I was describing with, you know, the expectations of perfection, the illusions of control, right? You are kind of creating what I call logic statements, right? You can call it a mantra. You know, this sort of comes from a little bit of the cognitive behavioral therapy research, but the point is not, again, to control the emotion, right? That we're not battling on the surface. We're trying to use that logic in the moment where the emotion is emerging to correct the underlying flaw. And when you do that consistently, you actually start to kind of chip away at it. It's a bit like kind of upgrading a piece of software, right? It's not like software in the sense that you do it once and it's fixed. It's more like software that you have to like kind of fix like 100 times, right? And then, right, the flaw starts to kind of dissipate in terms of size. And when that happens, the emotions start to dissipate in size as well. So, you know, it's sort of this real-time application of the correction, which you of course can prepare for ahead of time, right? You can be kind of reviewing your corrections ahead of time as well to kind of prepare yourself, but you have to be able to have the presence of mind to see the signals, right, that the problem has emerged, and the presence of mind to be able to inject that correction in that moment and have that kind of chip away or reduce the emotional reaction.
So next question is from Stuart. He would like to know if you are able to show the first emotion map again in the presentation.
Yeah, I can do that here. Yeah, there we go.
Okay, next question we have from Sufyan. I'm sorry if I am getting that wrong. Like he was wondering, what is the purpose of the advanced map? He said that he didn't believe that was very clear from the levels of perspective that you had mentioned. So maybe just reiterate that a little bit if you can.
Yeah. So what's going to happen? So here we're on this slide with like kind of a basic, you know, kind of identification of the signals, right, that a problem is present, right? The signals that, you know, mistakes are likely. Well, the problem is like, well, what if you're identifying this at, let's say, like level 7, right? You know, for me, like level 4, 5, or 6, right, in that middle range is where your emotions are going to start to be compromised, and your decision making is going to decrease, and you're going to be much more likely to make, you know, these common mistakes. So if the stuff that you're identifying in the slide here is at level, let's say 7 to 10, it's kind of too late, right, for you to be able to stop it consistently. But it's a great start. And so what you do is you ask yourself, okay, well, what signals or symptoms might occur kind of earlier before, you know, this problem has gotten too big. So the purpose of this more advanced map, let me get to it again, is really that, right? I really want you to be identifying, you know, what those signals are at levels 5 through 1. Because if you do that, right, then you're able to kind of utilize, you know, full faculties, right? The emotional system has not compromised higher brain function yet at that point. So it's recognizing these early signals. And the purpose of sort of scaling it in this way becomes something that you train, you learn. I mean, you want to learn this map in a sense, like learn this profile to such an extent that it's sort of internalized, right? You don't have to remember it. Sorry, it's just very easy to remember. You don't have to look at it to know. So what that does is it gives you the ability to recognize, like, oh, okay, I've just had this desire or I've just had this thought about the utility of money, and if I'm in my right mind, I never am thinking about the utility of money with regards to a trade. So it immediately tells me, okay, greed has popped up, right? And if it's, gotten to the point where now I'm wondering if I should move my profit target, well, now I know that greed has popped up with to a significant amount, that if I don't act now, right, then these bigger problems are almost guaranteed to happen. So the advanced map is really trying to help you to kind of see that in a way, like you kind of imagine like kind of driving down the road and like a thick fog rolls in and you don't even know you can't see very much in front of you. You want to know that you've taken a wrong turn quickly, right? And so the advanced map is trying to kind of erect these road signs, be kind of like the internal GPS that says, you've taken a wrong turn, like turn around. Because if you don't have that, then what has happened to you all already is that you end up just like kind of driving down the wrong path, and sometimes it leads to you kind of running your car off the road. So that's the purpose of it.
So Mr. Douglas would like to know whether or not your book deals with resetting subconscious issues.
Resetting subconscious issues. So I'm not entirely sure what he's suggesting there, but what I would say is, right, we're dealing with performance flaws. We're not dealing with, personal issues. We're not dealing with stuff with your mom or your dad or, all of that stuff. We're dealing with, these 30 some odd performance flaws. And so, yes, if we're talking about that category of stuff, then yes, that's all this is about. It's about uncovering the underlying flaws that are creating all the problems that you see. And then, you want to call that resetting? Sure. To me, I consider it more like upgrading, right? It's kind of like, the operating software with which you trade, with which you think, with which you make decisions, right, needs to continually upgrade. And if that's happening, well, then, your emotions are no longer going to compromise you for the same reason.
Okay, we'll take a couple more questions here. So Leo says, I noticed limiting the number of trades helps reduce the intensity of my emotions, especially on red days. Should I just stick to that rule, or is there a way to remain objective after experiencing those high levels of emotions?
Yeah, so that would be an example of what I was talking about earlier, where you're limiting the amount of trades to basically manage your emotions. So what I would suggest you do is really begin to kind of map those emotions. Like, what are the things that are kind of in there? Is it anger? Is it fear? Is it greed? Is it confidence issues? Right? The more you are able to kind of understand what is there, then you're going to be able to start to correct them and reduce the emotional volatility that you experience. And then you're not going to be able to have to limit yourself in the long run. In the short term, yes, continue to do that while you build a system for yourself to address those emotions. But again, it's a short-term strategy that is valuable, but it's not a long-term strategy because it's clearly limiting your ability to profit as much as you can.
Next question is from Orto. He's asking, any tips on how to mentally reset and not carry the emotional baggage from a big loss?
We're talking within the day, or kind of over day over day. So, part one is, right, losing is always going to hurt to some degree, if it does for you. But if we can minimize the amount that it does, then there's an easier way to reset, right? If you can find the reasons why losing hurts so much, right, then you have corrections that you can be using like immediately to be able to reduce the amount of emotion that you experience then, right? Because sometimes the losses, hurt more. Like you're creating a lot more emotion because your thoughts sort of spiral on top of each other, and you sort of think about all the downsides, and you're predicting more losses, and you're thinking about how you're not going to achieve your goals or your profit targets for the month, or all the kind of chaos that ensues. The faster you can stop that, the more you can kind of minimize the amount that you're going to need to remove that emotion in order to reset. So that's part one. Part two is, sometimes writing is a really helpful tool, right? I mean, the idea of venting to a person to help us feel better, is a valuable tool. The problem is that many of you don't have that person that you can just kind of dump your emotions on. So what you can do is just start writing in very much of a stream of consciousness kind of way and just get out of your head. And it can be the kind of thing where you just literally, if you handwrite it, you can just crumple it up and throw it away, or delete it from your desktop if it's typed. The point is, from a resetting standpoint, you don't need to keep that stuff, right? It can just help you to offload some of the responsibility, because the mind, again, is limited in its capacity, right? So digesting and processing that emotion when it's all in your head takes longer than when you write something out or when you talk. But if we're talking about the long-term decrease in those emotional reactions, then yeah, that stream of consciousness is helpful, because it's going to provide you with a lot of the signals and a lot of the details that's going to be helpful to being able to break the problem down and solving it long-term.
Next question is from Shane. Wants to know, would you recommend creating a map across many trades, days, or weeks, and then analyze them for common traits?
Can you say it one more time? Just want to make sure I understand.
Sure. Would you recommend creating a map across many trades, days, or weeks, and then analyze them for common traits?
Yes, 100%. I think you're looking at patterns here for yourself, and the more that you can see kind of the recurring thoughts, right? Because we don't want to overreact to signals that only occur once, right? Like, we want to make sure that you're identifying, okay, when I start to think about the utility of money, it is assured that greed is present. That's the kind of causality that you're looking for, and if you kind of overreact to maybe a thought that you had today, it may not necessarily be kind of indicative of the pattern that emerges regularly. So yeah, 100%. It's a very smart way of thinking about it.
Next question is from Khalil, and we are going to wrap things up here in just a few minutes, so we'll take 2 more questions as well. So Khalil would like to know, what is your thought about psychological stop loss, and is it an effective tool to manage your psychology?
In the short term, yes. In the long term, no. I mean, because again, it's limiting your upside. So again, I think we're looking at tools in the short term to help to manage things, much like a cast or a walking boot or crutches. But that stuff is not to be used long term, because otherwise your opportunity is limited.
Okay, and this will be the first of the last 2 questions here. Is from Tom. It says, my biggest mistakes happen when I stay in a trade or even add to a loser. I believe it is a strong desire to be right. How would you categorize that as one of the big 4 emotions? I may be hitting that brain shutdown point and either canceling my stop or just not taking the loss. Yeah,
so strong desire to be right is a confidence issue, and it's actually one of the topics in the book. It can come from a kind of a handful of reasons, right? Like, you got to think about, like, what's the reason why it is so important for you to be right? Is your confidence on the line, so to speak? Like, if you're wrong, is that going to hit you as a trader? Is it going to make you start to think that you're not as good as you are? Sometimes that happens because you're actually not that competent about your own competence, right? You're not that skilled in understanding what makes you skilled. It may sound a little strange, but sometimes it's actually really important to understand what makes you good, and that kind of becomes a stopgap, because then every day, every trade is sort of not like like in essence like the P&L of your own competence, right? Like, if you need to make money to make yourself feel like you're good at this thing, that you're able to kind of make money in the long term, sometimes that happens just because you haven't kind of consolidated and understood what makes you a skilled and competent trader in general, right? And so then in the moment, you need to be right in order to prove that you're good, but you don't actually need that to be the case. So that's kind of like one example, but yeah, it's definitely a confidence problem, and then one that's talked about in the book.
All right, so last question here is from Andy. I'm not sure if you actually had to field a question about this before. I thought it was pretty interesting myself. So Andy says, I got long COVID on November 27th and have a significantly decreased concentration, emotional control, market reading ability, etc. Do you have any recommendations for how I can start to apply your methods to this issue?
Well, so I think you're probably just going to have like kind of diminished capacity for doing this stuff, but the ability to kind of take it on doesn't go to zero in my mind, right? There's sort of always opportunity to improve. But I sort of say that, sometimes the incapacitation with which, kind of COVID is still affecting you, may be such that it is kind of like a broken ankle. And that, kind of running on it is not going to be the best thing for you. But if you're still trading, it tells me that you've got enough kind of enough mental capital, to kind of be able to take this on. I may just sort of scale down the amount that you're doing, to a level that feels doable, right? And not trying to, do everything all at once. So, for me, I would, again, kind of start with the very basic kind of stream of consciousness, note taking, kind of in real time as you see things pop up. And then over time, as you, kind of establish a pattern, you can kind of take that pattern and begin to break it down, either using my book or, others.
Okay, well, that wraps up the question segment as well as the presentation in general. Jared, thank you very much for joining us this afternoon, and everybody, thank you also for joining us. We hope that you were able to get something out of this. This is very interesting. Jared, if you want to just cover that last slide you got there on the presentation, please go ahead.
Yeah, thanks, Chris. Yeah, so if any of you are interested in the book, you can, kind of get it anywhere books are sold. It's on audiobook, ebook, as well as softcover. If you want to get a little bit of a discount, I mean, look, it's a $40 book. I can promise you that if you do the work with it, the $40 will pay off pretty damn quickly. But 15% discount through the end of the day. Just go to my website, jaredtendler.com. You can find your way through there or go directly to that URL. And use Lightspeed 15 once you kind of added it to your cart for a 15% discount. And for those who want to, kind of keep tabs on me in the future, you can go to the website. I've got downloadable worksheets that you can use. There's maps, right? There's profiles that you can use to map any one of the, the big 5 problems as well as others. I also have, more materials that will be kind of coming out, so you can kind of join my newsletter. If you want to email me with questions, my email is here. And I'm pretty active on Twitter and LinkedIn. So, listen, appreciate the time, and hope all you do well here, and hope the time was valuable for you.
Thank you again, Jared. Have a wonderful evening, and take care, everybody. You also have a wonderful evening.
Thanks, Chris. Take care.
Take care.